Hello, let's take a look at my bearish and bullish scenarios for Bitcoin, starting with the bullish leading diagonal. Here we are counting this as a finished wave Y, looking for a 1, 2, 3, 4, 5 into a wave 1, ABC, A, WXY into B. Now looking for a 5-wave move to complete wave C and a finish wave 2. After that we are moving up. Then the other bullish scenario is a 1, 2, 1, 2. So same scenario here, we are counting a finished wave Y. 1, 2, 1 ABC to W, X, Y into wave 2, 1 ABC into 2, and then we move up to higher prices. If we move on to the bearish scenarios, we have a WXY to a finished wave 4, leading diagonal into a wave 1, WX ABC to a Y into wave 2, and now also looking for an impulse down, the same as the bullish scenario, but this time we are looking for lower prices taking out that low. And the other scenario for a bearish one is ABC W, ABC to a wave X, and then we are looking for an expanded flat, AB 1, 2, 3, 4, 5, basically a 5-wave move upwards. So here we need to count this as a 1, A, B, C, 2, and then we are moving up looking for wave Y to finish. And we also have a triangle. So W, A, B, C, D, E to a wave X, and after that it is either a triangle or a flat, or a zigzag for that matter. We'll get into that in a minute. But basically we're looking for a three-wave move up, three-wave move down, and then a 5-wave move up. After that we are going down and taking out this low. And we also have this. So ABCW, ABCW, X, Y to finish wave X. And now we are looking for either an expanded flat, as I just mentioned, in a wave Y, but this structure also allows us to have A, B, C, D, E, like a triangle like that, and then we move down. Which one of these have the highest probability? It's important to take into consideration the bullish scenarios first. The main issue here is this count, the ABC. This looks way better, counts better as a 1, 2, 3, 4, 5 move, which means it can't be a leading diagonal. Other than that, this is a valid option, but just because of this structure, it's not really the highest probability. And the invalidation for this scenario is taking out this low. And also, if we touch this, this is a low probability wave 2. We don't want to touch this if this is to be even considered. And then we have this, the 1, 2, 1, 2. So 1, 2, 1, A, B, C into a 2 or a WXY here. So this touched the low probability wave 2 here, as I have written, meaning that this whole thing is a low probability wave 2 with this wave 1, meaning that this whole structure then becomes not really the highest probability because of time. You can see here, because if we take time, this wave 1 and this wave 2, this wave 2 is not really connected to this wave 1 anymore, because if this is not a wave 1, 2, another 1, 2, then we need to connect this wave to this, and meaning that we need to move this wave 2 over here. And if we do that, you can see that the fib time is starting to become very, very long, even stretching to a 4 fib time, which is very uncommon for wave 2, meaning that because we hit this low probability wave 2, this has a lower probability being wave 2, and therefore this has a lower probability of having this as a wave 2, meaning that the whole structure has a low probability. Wow, that was a long way to get there, but you understand. So those are the bullish scenarios, basically the bulls. So if we move on to the bearish ones, in a structure like this, consolidation, a lot of structure, it can morph into a lot of different shapes. So which one of these have the highest probability? Is it a higher probability that we are finished here? A leading diagonal in itself is a low probability scenario. It's a low probability structure. Therefore, this doesn't have the highest probability just because of this being a leading diagonal. Had this been a clean impulse, like a 1, 2, 3, 4, 5, then this scenario would have had a higher probability, but it doesn't. So therefore, this doesn't really have the highest probability either, but it still has a higher probability than the bullish scenarios. And what about this? W, X, and then flat into wave Y. If we are to reach this in a flat, we need to have a 5-way structure, meaning 1, ABC, and then we are looking for a 3-wave. This is supposed to be an impulse. So like 1, 2, 3, 4, 5, and reaching that. So it's a little bit early to say that if this is supposed to be a 5-way structure or not, but it needs to be that in order for this scenario to have the highest probability. And this also touched the low probability for deep double zigzag, meaning that it is a higher probability of this being a flat than it is a zigzag moving up. And also this, the triangle, W, A, B, C, D, E, and we move up. This is perfectly viable, and it is important to remember that after this zigzag up, we hit the 70 fib, meaning that it is a lower probability of being a double zigzag, meaning there is a higher probability that whatever comes after this has a higher probability of being either a triangle or a flat. And it is unheard of having two triangles after each other. So if this turns out to be a triangle, then it is extremely, I mean, it's unheard of to have a triangle as well in wave Y. And if this has a lower probability, since it hit the 70 fib of being a zigzag, then this have a higher probability of being a flat. And an expanded flat is the most common flat. So then it is something like this. So we move up, we move down, take out this low, and then we move up in a wave 5, faking everyone out here, and after that we move down and taking the low, because this is a corrective structure. And also this, the W, X, Y, X, and then we move up into wave Y. Same issue here, basically. We need to have a 5-way structure, a 5-way C here, if we are to reach that Y. So keep an eye out on that. And also, it is very important to keep in mind the big picture here, because if we take a bearish count like this and we zoom out on the daily time frame, the count here, you can see that wave 4 invalidation is here, meaning that if we take out this, it is a high probability that we are done. Basically, the bulls take over. But now we have touched the trend line, taking from here. So if you take a trend line like this, and you make it a base channel, you can see here that wave 4 not only touched the trend line, but it moved way past it, meaning there's a lower probability that this is a wave 4. And therefore, we need to also consider other options for this overall daily count, meaning that we need to resort to something like this, where we are counting an A, W, X, Y into wave B, C here in a W, so this is a zigzag, A, B, C, and then this is wave X, and after that we are looking for another zigzag, basically a double zigzag, meaning that if we reach this, taking out the wave 4, invalidating that, people will start to think that, oh, okay, so this is bullish then if we move up here. But in reality, we may be looking for a wave X. So everyone sees this impulse up and they are assuming that the bull trend has began again. But then we are moving down, creating another zigzag. So that's also very important to be aware of. But nonetheless, this whole structure that we are in now has a higher probability of being corrective, meaning that even if we move up here and with a five-way structure, it has still a higher probability if we get a five-way structure down being a corrective structure and taking out that low once again. So it's just a matter of patience and also keeping updated with all the different counts. If we get a five-way structure up, we want, if we are bulls, to have a three-way structure, corrective structure down, because then we're looking for continuation. But if we are looking at this scenario, we want a five-way structure up to fake everyone out, grabbing the liquidity that is here, and then we have a five-way structure down with a three-way correction, and here is a very good place to look for a short position, looking for the zigzag coming down. So yeah, I hope you enjoyed the video and that it was helpful to you, and I also hope you have a great day as well.